Hello, this is Martin from seekedge, the channel for learning about trading and investing. Welcome to the markets next week. This is a technical analysis where we look at how the market did last week and how we can plan for the next trading week, which is beginning from August 2nd, Monday 2021. So, what happened last week can be better analyzed by looking at the price actions and the patterns that forms, right? So weekly we had a hammer candle on the Nifty and a spinning top is what formed on Banknifty. So the hammer and spinning top both are reversal signals, and depending on where it is. Mostly it is a very effective when it is in a trend at the end of a trend, right? It's a peak of a trend, either at the top or bottom. That is where it is very effective. So this hammer and the spinning top may not be much effective because we are doing a consolidation right now. So, but both are slightly bearish. Reversal signals can be there, but not very effective since it is in a sideways. Once again, right? Nifty. Actually, what happened last week is like it did a V-shaped movement. The previous week also it did a V-shaped movement. It fall down, then recovered. Same thing exactly for the second week it is happening. It fall down and then 2.3% Nifty fall down and then it recovered. But Banknifty fall down, but it did not do a full V, right? It recovered only 1.8% or it fall 2.5%, right? So that's the difference. Otherwise, it was a V-shaped movement that is happening for this week, that happened last week and the week previous to that, both. Nifty daily candle, if you look, it's the inverse hammer, but Banknifty's latest daily candle, if you see, it's a spinning top. So that is also, as I said before, the hammer and spinning top both are reversal signals, but depends on where it is appearing. Since it is appearing on a sideways market, it may not be actual reversal that should be happening. Neither can we say it is bullish or bearish also, right? But that is a camel commercial. Sorry. Now, Bollinger Bands, which is indicating the volatility of the market, price movements, it shows that it is a contraction, it's a consolidation, volatility contraction in a very narrow range bound market is. That is the same thing. Most of the things are the same as in the last week, right? If you look at nothing has happened on that. It continues to be the range bound. So charts wise, if you see, this is what, right? You can see the daily candle for the Nifty, which is forming a bearish candle, right? And Banknifty, you can see that that is also a bearish candle. The weekly candle, if you see, that is also both are bearish candles. One looks like a hammer, other one looks like a spinning top, right? That's what exactly happened last week. Bollinger Bands, you can see that except for the big dip that happened and then a recovery, big dip and recovery on both indices, nothing has happened. It is consolidating. Banknifty, there is a difference that it tried to expand the volatility in the Bollinger Bands. Here also it is trying to expand the band. That means there is, so right now we look at the Bollinger Band, it's slightly bearish because it is trying to expand the volatility in the downside, just like how it tried to expand the volatility in the upsides in Banknifty. Nifty, absolutely no indication. It is not expanding anything. It is continuing the sideways movement. Now, support and resistances, also not much changes has happened at that levels. If you see Nifty, you can see that it is 15,500 and 650 is the first support. Then you have support at 15,250 and 15,400, that range. Below that you have 15,000 and 15,000 levels. While resistance for the Nifty is seen as 15,850, 950 bands, where last time also it tried to attempt that, hit that and then fall back. Then you have all-time high of 16,000. Then you have, beyond that you may have 16,150 as a resistance based on the Fibonacci 38 projections, trend projections. Now support levels are all previous resistance or Fibonacci 23, 38 and 50 levels that you can see on the resistance and the support, resistance level 1 and support level, all three. All Fib levels of previous resistance or previous swing lows basically. Banknifty can see 34,300 and 34,650 is where right now it is taking support kind of. So that is the 23, the previous swing low and the previous resistance zone. So that is the first support. Then you have 33,500 if it breaks up to 32,850, and then below 33,000 level also you can fall if it slips from there. But Bank Nifty resistance support is 35,500 to 35,950 where it hit last week, last to last week, right? Now resistance, there are multiple resistance above that, right? This all-time high is there. Before that there is that 6,500 which is the previous resistance. So Bank Nifty has got a lot more resistance supports as compared to that is the resistance support. Same information you can see that. So the channel has been slightly adjusted to it is still within the channel. You can see last three games are all the channels. Support resistance we have seen that upward. So right now it is trying to Nifty is trying to hit at the resistance level and then trying to break this. Right? Bank Nifty is not hitting the resistance. It is trying to not fall out of the channel and out of the support zone. It is just consolidating kind of. Although there is a V-shaped movement this week and last week, this week previous week's V-shape was on the top hitting the resistance, but this week's V-shape movement was not hitting the resistance. It was hardly attempting that. It was trying to consolidate or trying to take support of the support zone. That is all that was happening. So you can see that clearly there is a double top pattern that is emerging, and if this neckline of 33,900 is broken, means there is something that we have to be cautious and careful. Similarly, there is a double top pattern. Consolidation is all about multiple double tops. Whether the neckline of that combined double tops, is it breaking the neckline? Here it is 15,450, which is not broken till now, right? It attempted to do that. That is its swing. That is the M's middle part. So if that is broken, you have to be careful. Now look at the momentum. How fast or what kind of momentum is available in the market when it is trending, and whether it is trending or not. Let's look at that. So the moment indicator RSI is saying that it is sideways. It continues to be sideways, right? But long term and medium term, that's weekly and monthly, the momentum is good enough. It's bullish. That is about Nifty. But Bank Nifty is not. That's not the case. So Bank Nifty had a before getting the Bank Nifty, the Nifty had a bearish momentum divergence last week that we discussed in the same session, right? Weekly analysis we had seen that, but that's exactly what happened. It fell down to 15,500 last week. So it looks like the divergence, bearish divergence worked. But now if you look at, you'll see that in the charts in the next slide. Now if you look at, there is a bullish momentum, positive reverse divergence. The reverse divergence is that. Reverse divergence is always bullish. You can take the market back to 59. So that is some good. Probably the only good feel that we get from the charts is that there is a bullish momentum divergence on the Nifty alone. But Bank Nifty, if you see, the momentum is sideways, and weekly also the momentum has gone sideways. Nifty is weekly and monthly is bullish. Weekly also Bank Nifty has gone slipped into the sideways one. Now the trend indicator ADX. Now that we know the momentum, let's look at the trend. Trend indicator is saying that it is in bear zone for Nifty, and that bearishness is falling. It's not of great strength actually on the daily time frame, but weekly the trend is good for Nifty, weekly and monthly both, right? So long term it's good, and the trend indicator for the Bank Nifty, if you see, it is bearish on both time frame, right? Daily and weekly also it has gone. So momentum and trend is slipped into bear zones in the case of Bank Nifty on the short term and the medium term in Bank Nifty. While Nifty, this happened only in the daily time frame, but monthly and weekly Nifty is good enough, right? And Bank Nifty monthly it's fine. It's holding the monthly trend strength. Okay. So this is the same thing that we talked. You can see that it's in sideways. Bank Nifty also in sideways. This is the divergence that we're talking about. Last week we had a bearish divergence which worked and met the target, went to 15 500 levels, and now we are forming a reverse divergence, which can take the market back to where it fall from. Now the trend, this is the ADX trend indicator, which is showing that it's in the bear zones for the Banknifty also. Now that is about the charts. Now we are getting into open interest analysis and the volatility. So open interest data is showing that the futures data is showing that it is long unwinding. That long unwinding is bearish. I was long, I am coming out of the long. It's a long unwinding, right? Futures data is showing that. And options call data is showing that 1500 got highest resistance. After that, you have 15800 as resistance. Support zone is at 15700 and 15800 also the next support zone. That's how it is. So the fight is happening between 15700 and 15900 for the August 5th expiry. Banknifty 35,000 is the resistance zone. 35,400 is the support zone. That is where the action is happening. Put call ratio is not bullish enough. For the Nifty, for the next expiry August 5th, it is 0.81 for Nifty. Banknifty is 0.74. It's not bullish. Okay. I've written it. It's not bullish. 8.1 is also bullish. The correction that you have to make it out of. The put call ratio is, which is not very bullish. Only above 1 is a bullish. So 0.81 means it's not bullish. Neither is bearish. But Banknifty is a kind of bearish. 0.74. There is a correction you have to read here. Okay. Now the VIX shot up nearly 70% last week, and then it came down a little bit and then settled at 12.8. Still it is very low. Right? You can see that the IV is implied volatility is 12 and the HIV is 8.7. So it's above, but the IVP level is still at very low 3 levels. Hardly makes any scope for the option sellers or buyers. This is the open interest that is showing, right? You have 15,900, 15,800 resistances, 15,700 supports, and 35,000, 34,500. Now sector watch, right? So the industry segments, if you see IT sector actually moved upwards, around 3% last week moved upwards, right? But we are again there is a bearish divergence that is seen on the weekly, so you have to be cautiously bullish, but it is very bullish. So the dollar is strengthening means IT is going to perform. All IT companies are good. More or less, some results things also came last 2 weeks. Two different companies are announcing results, and the impact could be that also. It was reasonably good results for some of them. So, but not as expected for some of some others. But overall, it was bullishness that we are seeing. But there is a weekly divergence we are a little cautious about. Cautious bullishness. FMCG corrected. It went into the bullish zones last week, but the previous week, but last week it corrected to 0.5%. So you need to wait for the there is a breakout that failed. Double bottom breakout failed on the daily. So we have to wait for the momentum to catch up before we can look at stocks that is in this FMCG sector. Now the great thing is the metal went super bullish, and last week we discussed in the same show that there is a bullish positive reverse divergence is there, and that worked out 10% of clear breakout happened on the metal index. But now that it has broken out, you can see that there is a bearish momentum divergence. That is something. So again, you have to be cautiously bullish on metal and cautiously bullish on IT. FMCG, wait for a momentum to catch up. Auto sector clearly bearish, 2.5%. Further it fall down. M pattern we said last week also we discussed. So it's going to continue to be bearish is what we can expect from the charts. Now pharma, also we discussed in the same show that pharma has got a bearish momentum divergence, and it worked exactly like that. There was a bearish momentum divergence and suddenly it falls 6% and then it bounced back and then recovers. Pharma stocks, now there is a bullish momentum reverse, reverse divergence is there, which is bullish on the pharma sector. So further up can be expected. But so pharma is turned to be bullish, metal and IT is cautiously bullish, FMCG sideways, auto sector is bearish. There are 2 stock picks for the next weeks that I have listed out here. Balakrishna Industries, weekly chart is showing that it is trending beautifully in a chart. It also has got a positive reverse divergence, which is bullish, and it can take the market further up. So that is one thing. Second is Godrej Properties also, which was earlier put on the Twitter My Twitter handle, it was published 2 weeks back, 2 or 3 weeks back, and then there was a range shift that happened. This is a perfect example for a range shift from the sideways to the bullish zones. And after the range shift, there is a positive reverse divergence that happened, and the target for which is still not reached. So there is further chance for up move. So Bangladesh Properties is a good bet. Balakrishna also a good bet. Now, foreign institutional participation, if you see, 8,800 crores of selling happened in Nifty last week alone, and they bought most equal amount, near to equal amount. That means just 600 crore less. So 8,200 was bought by the domestic institution, while more than 800 and 8,800 crores was sold just in 1 week. That is something that you will be very sad about. So derivative section net long has moved up last week. That's what it says. So that is about the market participation. Now we look at the global markets. US market has all of the US markets, the Dow Jones, S&P 500 and Nasdaq, all forming a weekly, small body weekly candle. So it corrected a little bit last week, that we can understand. Dollar index has strengthened. Crude oil further shot up, so there is no respite, and it is not good for the economy. USDINR currency pair was ended up in a red small pole. And you can see that on the top, the chart shows that it is forming a red. It's a weekly. So actually, it is consolidating after it hit the channel top and attempting to go up. That's what it is. Gold, you can see it's formed a green candle. It is also trending upwards, but in a very slow momentum. So VIX is still at 12.8, is low level. So spikes can come in like happened last week. So when it comes, wake up strategies will work. So calendar spreads and double calendar spreads and all that can work. That's why we have an option strategy of a calendar spread, which is selling the August expiry 15,600 put and call, and then hedging it with the expiry following to that on the August 12th. Right. So this is a Vega posture. So if there is a spike in the VIX that happens, this will gain more, right? And the hedge positions are not likely to can protect you, basically. Since it is a calendar. So that's a wrap. So this is a wrap up. So markets, we have seen that it is taking a V-shaped movements twice. Right? Market went fall down heavily, then shot up and recorded it. Same thing happened last week also, fall down and bounce back. So the momentum is in the sideways, trend is bearish, and then Bollinger Band is indicating that consolidation is continuing, right? And it is not breaking out also. It goes to the support region almost, and then it's basically it is zigzagging from a daily short-term point of view, if you see, right? Banknifty is more bearish. It is not supporting the Nifty. So overall, the trend bias at this point in time, if you see, it's bearish actually, because FIs are selling heavily, thousands and thousands of crores. This kind of selling is not seen, right? If you look at the charts, look at the charts. What kind of selling? 3,500 crores selling happened only on Friday. One day, one single day. So that kind of selling is worrisome. Banknifty is turning more bearish than the Nifty is not supporting it, even though it is not performed well as compared to the Nifty. If you look at last 2-3 months, there's a lot of catch up to do. Still, it is turning even more bearish. So the weekly bullish divergence that we mentioned in the Nifty is some hope that Nifty can go up again. It is only hope. Otherwise, the bias is negative. The VIX, again, it is a low level. These last two paragraphs are the same repetition, because VIX is low level. It can spike up. The low VIX immediate spikes will not benefit the sellers, right? Either the buyers also sometimes, right? So the V-shaped breakers, confuses the swing traders as well as intraday traders, right? So positionally, we have to wait for that neckline for the indices to break, and the moment it breaks, if your positions, depending on where your positions are taken, you'll have to think of exiting at 15,500 or 15,450 is broken, or 15,000 is broken. Depending on where the positions are broken, you'll have to think of exit plans for personal traders. Right? Swing traders is only non-directional. Vega positive strategy is the only thing that may work. Calendar spreads can be bettered, but V-shaped recovery is the kind of market moves that have calendar splits also could work because the Vega advantage is there. So that is a summary, right? So it's again kind of uncertainty is there in the because you have a with a bearish bias, you can say. So will we continue to, so since the domestic institutions continue to buy equally as much as the FII is selling, there is a hope, right, that the consolidation is something that may be coming. But you have the fear that Bank Nifty is breaking down and we may, you don't have HDFC to support, you don't have Reliance to support, you don't have heavy players to here seen here. They are all FII favorites and they're getting sold, right? So that fear factor is still there, uncertainty is there, right? So the strategy should be to go for non-directional for a short term. Positionally, we have an exit plan if neckline breaks by any chance, right? And hope the consolidation breaks down either of the sides, right? In the coming August month, new expiry month, right? I hope this will give you a good understanding on the a bird's eye view on what happened on the market on a weekly basis, right? And what strategies can be there in your mind for the upcoming weeks, right? With respect to all the aspects like the price movements, the volatility, right, and the global cues and all that, right? So if it helps you, share it to maximum number of people, right? Liking and sharing and subscribing to our channel does not cost you anything. That is the only return that you can give, right? So that will keep us motivated, and therefore I request you to please subscribe and share to maximum number of people, and hit the like button if you like it. Right? Leave back your feedback so that it can help us to improve, with better quality content again. Thanks a lot for watching. Happy to.